Good morning, this is Mayor Valensky with Driving Markets. Okay, so what is driving markets today? Well, the US yesterday, it's focused on the US because that's the main driver in the world, is in financial markets, that is. It goes as follows. They were quite happily continuing their rise from Monday evening, so it looked like it was going to finish the week approaching all-time highs. Everything looked very rosy, everything was very, very exciting, great for those people who are holding long. And then out came Lael Brainard, who is the candidate for the Fed chair. She said that interest rates may have to go up in March and faster than anticipated, more aggressively, because she believes inflation is going to continue rising, which is what I've been saying for weeks now, that keep an eye on inflation. So you've got all the experts, or the so-called experts, looking at inflation and stating that this is going to have a major impact on the economy. With that, their NASDAQ completely was hammered, dropped more than 3% during the session and finished 2.5% down, which is around about 300 points. 350 points down. Be aware that the NASDAQ, or be informed that the NASDAQ is always going to be sensitive to any type of interest rate rise, simply because the NASDAQ stocks are all speculative. They're all based on massive future earnings, and they're based on growth. And obviously, people who are speculating will speculate with money that is cheap. If inflation comes along, then money's going to get more expensive by way of rising interest rates, and as a result of that, the investor is going to pull money out of the NASDAQ and the tech stocks and put it into more defensive and secure assets in order to protect their money. So it goes as follows. You had a survey of CEOs yesterday in the States, and they came out extremely negative. Majority came out extremely negative about 2022, and their major concerns are inflation and the cost of borrowing. You have to remember, most companies, apart from companies like Apple or Facebook, that borrow money will end up, most companies, talking about regular companies in the marketplace, they borrow money, and that borrowing of money could be by simple overdraft, could be by simple business loan, or could be more complicated as the business gets bigger in terms of bonds or debt, going into markets and taking money from the markets in order to keep their business running. That cost of money, or that cost of borrowing, will rise, and that could have a significant impact on their businesses, and that's why they're very, very, very concerned. Going forward, obviously you're going to have days that are going to rise, but my overall view, as I said yesterday, is that I think markets are going to fall significantly. In addition to that, you've got also something looking at something like Tesla. Tesla fell over 6% yesterday, which is significant. Tesla's a great stock, don't get me wrong. I'm not negative on Tesla. I think it is a market leader. It's a household name. It's got great marketing. I think the boss, Elon Musk, is terrific, even though he's a bit extreme, and he's dynamic and erratic. But Tesla as a stock, I think, is a great stock, and if it falls, why not pick something up? Why not pick it up if it drops significantly? You can pick up Tesla, and I think it's a good long-term hold. The electric car industry is only going to grow. It's not going to diminish. It's going to get bigger and bigger and bigger, and I think Tesla will be the major barometer of where the electric car industry is going. So that's a good stock, even though it fell off yesterday 6%. In my opinion, it'll probably come down further, but that would be more of an opportunity to buy into the stock. Then you've got the defensive stocks, which are the classic energy stocks and the regular producers that could also be built into your portfolio as a protective mechanism. What else have we got to look at? Overall, I've been saying at these levels where the markets are near all-time highs, you should be taking out some puts or some shorts on the market to protect your portfolio. Again, cost of money will rise in the near future, much more aggressively, in my opinion, than it has in the past. A couple of points regarding trading. Remember, when you trade with reputable firms that are established, and they're going to handle the execution of your trades correctly, and you're going to be able to withdraw your money correctly. So those are mainly regulated. Only deal with regulated firms. If you have any issues finding a regulated firm, whether in the UK or outside the UK, that you want some input on, then I'll be happy to help you on that, tell you which ones are good, which ones look reasonable, etc., to make sure that your trading is as successful as can be. Remember, only trade small, don't trade large. Beware of scams. The scammers are far sharper than the regulated, knowledgeable guys, simply because they start to get you all excited and they appeal to your animal instincts to get you winning and making money. You're going to be a millionaire. They're just out there to scam your money, so be very, very, very careful of scammers. I've been there, I've seen it, I know what they're like. They're public enemy to all. I'm their public enemy number one, and they are public enemy number one. So you have to be very, very careful of scammers. They are absolute criminals of the lowest level of scum. So be aware of that. You can contact me on LinkedIn. Contact me on reply to this YouTube. Please subscribe to the YouTube, Instagram, WhatsApp, etc. So wish you well. Have a good weekend. This is Mayor Walensky with Driving Markets.